the big story today, which is tax cuts, the deficit, the battle over both of them. You know, it leaves a lot of us wondering what's really the right thing to do for the economy. Take the politics, take the policy out. The president once again defending the deal, though. He's calling it crucial to America's future.
As we meet here, there's an important debate, I think most of you are aware of, on Capitol Hill that will determine, in part, whether our economy moves forward or backward.
Those are the stakes. Peter Schiff is president of Euro-Pacific Capital. He's the author of How an Economy Grows and Why it Crashes. So, Peter, do you agree or disagree with the president?
Well, I never agree with the president.
Come on, Peter. Every once in a while, he says if this compromise doesn't go through, the economy is going to move backwards.
Well, it's going to move backwards whether it goes through or not, because we're still not getting to the root cause of our problems, which is too much government regulation, too many government subsidies, the Federal Reserve keeping interest rates too low and bailing everybody out and printing too much money. You know, it's not even true. And they're talking about tax cuts. These are not legitimate tax cuts because government spending is not being reduced. So we still have to pay for all this government. And if we don't pay for it with taxes, we're going to pay for it through inflation. So what Americans get in the form of lower taxes will be more than offset by higher prices. It's going to cost Americans a lot more money. You know, we're talking about this cold weather that's coming in the east. It's going to be a lot more expensive to buy heating oil because of all these deficits that are being financed by the Federal Reserve, which, despite Ben Bernanke's comments on 60 Minutes, the Federal Reserve is printing money.
So, to use a baseball analogy, are we taking our eye off the ball here? And if we are, then where should we be looking to actually see an improved economy?
But we're not going to get any improvements until the government gets out of the way and stops making it worse. We have to understand that economies don't grow because we spend money. They grow because we do the opposite. We need savings. Savings finances capital investment. It's what gives us greater productivity, more goods and services, more jobs. We're not getting that. We're just getting more government. We're getting more money being created out of thin air by the Federal Reserve. That is undermining our economy. That is preventing it from recovering. All we're going to have 2 years from now is an economy that's in worse shape. We're going to have more people unemployed. Unfortunately, though, the employed and the unemployed alike are going to find a much higher cost of living. And not only are prices going to go up, but long-term interest rates are going to go up. Look at what's happened in the bond market just in the last several days. Yields are moving up. They're moving up a lot faster now because the market understands that bigger deficits means more money printing, more inflation, and so that is being priced into the bond market in the form of higher interest rates.
So that's what that market is seeing, higher inflation, as you were saying. So there has been a segment of the economy, though, Peter, to your point, that has been saving money and keeping more cash on their books. And part of that segment is the big banks. And we heard of a meeting between the CEO of one of the big banks, JP Chase, Jamie Dimon, meeting with the president for what we don't know, apparently advice on the economy or something like that. There's been rumors that maybe he would replace Larry Summers. Just when you hear that, is that a good thing to see some more of these big business people come down to D.C. or not? Because that's been a criticism before.
It's never a good thing when Washington and Wall Street come together because they always pick the pockets of Main Street. I mean, that's what this government has been doing through this Federal Reserve, is helping Wall Street drain the wealth from Main Street. These low interest rates, this cheap credit that's coming through the Federal Reserve, it's not benefiting business, it's benefiting Wall Street because they're gambling, they get this cheap money, they speculate with it. Meanwhile, real businesses have a hard time getting loans because the credit is being siphoned over to Wall Street, or it's all being used by the government to finance spending. It's going to students, it's going to housing, and
well, Peter, let me just jump in because we got to run. But the big question for a lot of our viewers is just whether or not we're actually going to see a recovery in the next few years or whether it's further out from that. And I only have about 30 seconds, but what is your projection?
There's no recovery anywhere in sight. Yes, we're spending more borrowed money right now. We're basically drinking more alcohol, so we're doing stupid things. But we have a real hangover coming. The financial crisis that could hit in 2011 or 2012 is going to be much worse than what happened in 2008 because this is not just private industry that can't pay its bills. We're going to have the U.S. government government that can't pay its bills, the various states that can't pay their bills. It's going to be a sovereign credit crisis. It's going to be a currency crisis where the dollar is plunging, bonds, municipal bonds, treasuries are plunging, and we're going to have a lot more unemployment, but more inflation, higher interest rates. We're digging ourselves into a much deeper hole.
After that, Peter, I think we could all use a drink. Speaking of that, I don't know.
We have to stop drinking. We have to sober up. But Bernanke keeps spiking the punch bowl.
Off that debt. Peter, we'll check back in with you. We always like to hear your point of view, and thanks for taking the time to join us today.
Sure.
Not exactly optimistic, huh?
But that's Peter's thing. We should remind our viewers, you know, he's the one that called the crash. He made quite a bit of money off of doing that. So just keep it in perspective, the source of some of the information, too.
All right.